I'm going to answer, Aaron, your second question first. Aaron says, could you tell us how to set up your married puts? Any recommendations? Okay. Absolutely. The married put structure was originally created, our preferred married put structure, described by the radioactive trading techniques, was created by Kurt Frankenberg back in the early 2000s. And what Kurt had done is he was a martial arts instructor, He had his own dojo and everything, and he wanted to take some of the profits he was taking off of that and apply it to the market. So he took a course that taught him how to do covered calls, calendar call spreads, bull call debit spreads, and other things. This was in 2002, maybe earlier than that, maybe late 90s, early 2000s, Aaron. But in any case, he took this course, and he was doing pretty well. He sort of put his savings that he had in there to make money in the market, as we all do. Oh, someone's telling me I can make 10% per week using 0 days to expiration options. Someone's telling me that I can use this kind of box spread to be protected and make 8% per month. And, oh, you can make 130% on your trades buying calls on these specific stocks, whether the Mag 7 or something along those lines. We've all seen it. I get the same emails you guys do. We know the overhype. Well, Kurt did that. So he's trading for a couple months. He makes some profit. He's doing well. He calls the instructor, like myself. This other service had, coaching instructors. And he says, hey, I'm doing really good. I'm really doing really good. And they said, hey, you could do so much better if you traded on margin. So he's trading covered calls and some calendar spreads, but mostly covered calls on $9, $10, $12 stocks. The ones that are offering a potential return, if assigned, of 5, 6, or 7% with a 10% downside protection, because the implied volatility is really high. And they didn't tell him about that. So he said, okay, yeah, I'm going to do this on margin. And it was a biotech stock. And they had a phase 2 trial coming out, and the stock collapsed. And then his brokers call him and say, hey, you've got a margin call here. You've got a margin call here because it dropped another 2 points. Look, the stock that you bought at 12, that you sold the 12 straight call that, you collected $3 or $4 for, is now trading at $1 per share. And it essentially wiped out his savings, did some other things in his life, and so forth. But he didn't give up. He looked at it and he said, hey, that money went somewhere. I did a covered call position where I bought stock at this low price, sold a call, and said, okay, if you take this, I make my 6 or 7% on this high volatility position. But I didn't realize, even with a stop order in place, that I could lose 75, 80, or 90%. And he started to think, someone made money on that. Someone did the opposite transaction. And that's when he started evaluating the married puts. Hey, if I'm putting part of my life savings, if I'm putting part of my savings into stock positions where I know now that a stop loss can be violated, a stop loss is just assumed insurance. What if I just buy the stock and then buy a put option which guarantees that I can't lose more than 5, 6, or 7% on the position? But hey, I was taught something well by this group where they said, hey, you want to sell month by month because you get a better annualized return. You get the higher return if you sell week by week, month by month, in theory. Right? If you just look at the numbers on an option chain, when you're selling premium, whether it's cash secured naked puts, Aaron, whether it's bull put credit spreads, whether it's covered calls, you're going to get a higher annualized return selling week by week, 2 weeks out versus 1 month out, so on and so forth. But at the same time, buying works the same way. Just like your insurance policy for your car or for your home. If I buy further out in time, if I buy 6, 8, 10 months out in time, Aaron, I'm paying a lower cost per day than buying a cheap put option that's just 5 days out, 10 days out, 30 days out. I'm getting a better bang for my buck. I'm getting reduced insurance policy buying farther out in time. But I want to buy those positions, that protection. I want to buy my calls. I want to buy my puts farther out in time. So that's the introduction to the married put. Now, the blueprint discusses the 13 different ways and you saw me use a couple of income method number ones. I lightly mentioned adjusting the put. There are 4 income methods that you can use the put in up markets, down markets, or sideways markets. The idea of the income methods is you're lowering that initial at risk. So potentially you can be bulletproof on your trades going forward. No risk on the stock, still 3, 4, 5 months left of protection in place, and still take advantage of the upside. There's income methods that leave the upside open. As you saw with my income method number one, that does cap the gain as well. Okay. Now, your question directly, how you set up your married puts, any recommendations? Well, the full course is discussed in the blueprint, but on PowerOptions, 95% of the trades that Ernie and I open that are shown in the Fusion portfolio at RadioActive Trading come directly from our default search. Remember, at the beginning of the presentation, I mentioned that we support over 23 different strategies. And of those 23 different strategies, they all have default searches, which are our starting points where we would begin if we were opening a new trade in that strategy today based on our market expectations. 95% of, again, the married puts that we open come directly from this default search. On PowerOptions, you go to married put, you go to search, and the RadioActive sorted by earnings per share growth is our preferred screen. Right now, you saw earlier, I mentioned AGI in the call I sold. This is, AGI is in there. That's still in the married put search. 26 results to go to page 2. I want to see if my other recent trade is in there. I don't think it is. Orla Mining, that was one I was considering. It's a lower price stock. Roblox is one that my daughters want to get me into because they play Roblox all the time and they see this from time to time. Howmet is one that Ernie is in right now. I think he's also in NRG if I'm not mistaken. And he's also in Toast. These are open positions in the Fusion portfolio at RadioActiveTrading.com. The other one I opened is Caesars. I think that was one of the 5% that I drifted off, Aaron, and did not use. But this is our preferred search. This is what we will use. This is where we find our open trades. You see a firm in here, Life 360, NVIDIA, ODD, Alamos Gold. And you can see the criteria down below. As I mentioned, we're going at least 150 days out in time. We're controlling risk to single digits. We're not going more than 20% in the money because then that ruins the expectancy of potential profit if you go too deep in the money on that situation. Looking for some basic stock technicals, very basic. Stock above the SMA 50. We want some good volatility for the good premium. And the fundamentals, of course, 9 to 200. Well, yeah, you can increase that if you want to look for higher price stock. We want this earnings per share growth, as you can tell, is how we're sorting it, Aaron. Married puts. Buying a stock, buying a put option that's far out in time, I'm expecting growth. My goal for a new married put, what I look for when I open a new married put is my expectation is the stock is going to go 3 to 5%, go up, Aaron. 3 to 5% within the next 20 to 40 days, and then potentially another 4 to 8% in the following 45 to 60 days after that. I'm looking for growth stocks. This is a bullish position, I'm not going to lie. The income methods help you when the stock doesn't do as you expect. Okay? Now, just that being said, why we do that, what I'm talking about is, let's go back real quick. Why did 95% of our search results come from this? Alamos Gold. It's down 1.2%, but you saw it was up above $28. It was up 5%, and I've only been in this position 9 days. Caesars is up 7% in the 18 days that I've opened it. That's discussed in the blueprint. How do we look for these positions? What, in addition to what comes up in that default search that we just showed, Aaron, what is the other decision process, I'm sorry, folks, behind why I would select it? We look at some technicals, we look at the stock chart, we look at the stock that we feel has the potential to match those goals, all discussed in the blueprint. And you say, how do you adjust the trade when the long put goes in the money? Well, we start with the long put in the money. You can see that. All right, so Affirm Holdings is at 64.70. Now, let me get something. I want something better. I don't want a pharmaceutical. let's just use Alamos. I just opened it. 2662. Currently showing the December 27 put, is which I originally used, Aaron, but I rolled it up to the 28. This is a 7.5% risk on the trade. Okay, so let's go to the profit and loss chart. And so we've got a 7.8, 7.5% risk on this position. It's 161 days out in time. Now, I'm not down 7.5% right now. If I bought this stock right now at 26.62 and I bought the put at 258, Aaron, I could immediately turn around and sell this for maybe 26.61 and sell this for 255. Slippage to bid-ask spread. The maximum risk occurs if and only if I hold the position all the way to December expiration. The stock is still below $27. I make no adjustments following the rules in the blueprint, the full course of the Married Put approach, and I accept no dividends. I just deny the dividends, which you can't really do, but and you wouldn't do. But that's the worst case scenario. That's only at expiration. As the stock moves up, we're going to see more profit on this position because we still have a positive delta. The delta on the stock is 1. The delta on this put might be about 0.55, 0.58, somewhere in that range. So I'm still going to make positive delta as the stock moves up in price. And then I can choose, as we just saw with my position, hey, the stock moved up. I started with the put in the money, Aaron. I rolled it up to a higher strike put position, and then I sold a call against it. So instead of having a risk of 7.5%, almost the same price, close to the same price that I entered the position, I now have a risk of only 4.6%. I lowered it from about 7% down to 4.6%. And if the stock stays right here at 28, we're going to make about 4% on the position. And remember, that's just in about 16 days. Okay? But all of that is discussed in the blueprint. 4 income methods to adjust the put. What are the other 13 income methods? Generating income by simply selling a calls we see here, creating sort of what looks like a calendar spread. But there's other adjustments. Income method number 6, a bear call credit spread that leaves the upside open. Ratio call spread, using condors inside the Married Put as well. Selling puts against the Married Put position. Income method number 7. Income method number 1B. Butterflies, income method number 11. There's a lot of different ways to generate income and reduce the initial at risk on the trade and still get positive income on the position as well. That's the whole concept of the blueprint and the radioactive trading techniques. Remember, you can check more information out on that, Aaron. If you just go to the Married Put tab under Power Options, you can just click on the blueprint here. You can view the table of contents. You can look at some other detailed information. You can also view that at RadioActiveTrading.com. That's where, the main site is RadioActiveTrading.com for the ideas on the Married Puts. Again, listen to the first chapter for free, view the table of contents, other information. The Fusion subscription at RadioActiveTrading.com is where Ernie and I post our trades here in the Open Trades Trade Tracker. There's different Fusion lessons. This is a separate subscription from Power Options. It reinforces all of the ideas, concepts, and income methods on the Married Put approach. Basic search, the RPM report, similar to the search tool we just saw in Power Options, but you can't make any adjustments. Stock insurance tool. And then you have members only webinars and white papers that are related directly playing the bear side of the market with a protected strategy. Get the most of your Fusion subscription. 5 ways to manage income method number 5, just different approaches. And also Blueprint owners, you have access to the Blueprint owners only webinars, where we discuss ideas on income methods in depth, more than what is shown, more timely, but more recent discussions that are shown in the blueprint. There's a time for income method number 9. This was during troubled markets when the market was declining. Why would I use income method number 9? One of the 4 ways to adjust the put. Blueprint owners Q&A, putting your blueprint to work, income method number 1, selling the call, and much, much more. So 2 different sites. Power Options supports over 23 different strategies. It's your one-stop shop for self-directed options investors and more. Radioactive Trading, the products here are related more to that Married Put approach, controlling risk to single digits, and using the different income methods and being able to see the income method opportunities in your portfolio tool at PowerOptions based on the guidelines of the blueprint as well.